Gentlemen, welcome back to the channel. Tesla stock is up about 1% today. There's a bunch of big news we're going to get into, including new analyst notes on Tesla specifically heading into earnings. A big AWS blackout, which has nothing to do with Tesla, but big implications for our markets. I think you really need to hear this. Not to mention, Tesla is scaling Cybercab recruitment, getting ready for mass production of this vehicle next year. We have a ton of news to get into, broader market news as well. Hassett is indicating that the government shutdown is likely to end this week. That's positive. And that the miscommunications with China recently will likely get solved this week as well, fueling broader market optimism. But I don't think it's fully reflected in markets because of the AWS blackout today. We'll get into all of this and much more in today's episode. Number one, hit the like button. Number two, subscribe to the channel if you have not done so already and you like to make money. And number three, check out that link down below in the description of today's episode if you want to come invest in these opportunities with us. We're going out in AI, software, robotics, energy, quantum, all of your major fields, biopharmas, for the next 10 years and investing in the under-the-radar hidden gem opportunities within these fields. That is how we are able to, so far this year, return over 160% year-to-date returns, which I think that's going to get even more dramatic into the end of the year. Not a recommendation. It's not financial advice. Just maybe pointing out some opportunities here and there. Check it out if you guys would like to join. Link down below. And let's get into today's episode. Okay, so I do think the AWS story today is a big one we need to get into. But let's get into your Tesla stock news first and foremost, because there's a lot of it and we need to share it. Also, first things first, I will mention Tesla is above its 20-day moving average. As I talked about previously on this channel over this weekend a lot, we did have a close above the 20-day moving average on Friday. Historically, that means within days, Tesla is going to make a substantial move higher. That's just historically the correlation. You break above the 20-day moving average, you tend to consolidate for a couple of days and then skyrocket. Maybe it's not a coincidence that Tesla's earnings are on Wednesday and you're getting this strength. I don't know. I don't know the exact day in which Tesla will move higher, but historically, 1 + 1 = 2. Breaking above the 20-day moving average equals the stock going substantially higher. This could be the start of a breakout to new all-time highs. Sawyer Merritt writes on X that everyone needs to vote their Tesla shares to ensure that Tesla's proposals win decisively and show that proxy firms have no influence over the outcome. The deadline is November 5th for U.S. investors, but next week for some international ones. Tesla today pushed back on proxy firms' no-vote recommendations. Tesla responded to Glass Lewis joining ISS and recommending a no vote on CEO Elon Musk's pay, saying these firms have repeatedly opposed Tesla's proposals since 2018. The company argued that ignoring past recommendations helped shareholders benefit from a 20x market cap rise. Tesla criticized the firm's one-size-fits-all approach, saying it undermines shareholder interest and long-term value. The company highlighted the contributions of board members Ira and Kathleen, emphasizing their role in governance, strategy, and talent acquisition. Tesla urged shareholders to support all proposals. So if you have not voted already, it is critical, whether you have 1 share or 100,000 shares, to vote your stock. Elon Musk is also commenting on the no votes from the proxy firms, and he says that Tesla is worth more than all other automotive companies combined. Which of those CEOs would you like to run Tesla? It won't be me. So again, Elon is saying basically if this vote does not pass, he may not run Tesla, which is quite logical considering you wouldn't go to a job and do the job for free, would you? When you got bills to pay and a family to feed. Tesla has a new recommended maintenance section in its app and tells you what your car needs. It also shows you the estimated life remaining on each component, the estimated cost to replace, and the date of expected replacement. Tesla added more superchargers in the US in Q3 than the next 9 networks combined. Tesla Model Y L has already become China's 4th best-selling mid to large SUV in its first month of sales, with 8,221 units that were sold domestically in September, with that number expected to rise quite a bit. It looks like demand is very strong in China, with wait times extending into December. And look at this. This is one of the big news today. Tesla is ramping up its hiring for the Cybercab production team. Tesla is looking for a metrology technician, an equipment engineer who will work on the Cybercab's plastics team, and a tool and die supervisor. And we've seen in the past couple of days the Cybercab operating in Giga Texas, as well as Fremont, and even on public roads outside of Giga Texas. So, again, piecing these pieces of the puzzle together means we are getting ready for a mass production launch in 2026. Also, in a new report today, Tesla is dominating the UK mega battery market. The 16 UK batteries from which Tesla trades power account for nearly all of the top performing assets by revenue. Tesla's success is down to the sophisticated approach of the company's auto bidder trading software, as well as its batteries' larger storage capacity and location, expert said. Wes says watching Model Y flow out of Gigafactory Texas all on their own is still awe-inspiring to me. I get off the shuttle and stand there watching, taking in the fact that trailers full of base materials unload, you can see them in the background, and then completed vehicles drive themselves out. Fran Vons Holson says the new Tesla Roadster unveil and demo is still on track for this year in 2025. Franz hinted at the new Roadster having its own complete unique set of paint options. He says, quote, "I'm excited to showcase the Roadster for a lot of different reasons. The wait will be worth it." Franz says on the Model Y Standard, quote, "I think you get more than what you pay for. I think it feels more premium than the price point at $40,000. Wedbush Dan Ives has a new note on Tesla with a 12-month price target of $600 for Tesla stock. He says, quote, "We continue to believe Tesla could reach a $2 trillion market cap early 2026 in a bull case scenario, which again is around $640 per share in a bull case scenario, and $3 trillion by the end of 2026 as full-scale volume production begins of the autonomous and robotics roadmap. We believe our outperform rating and $600 price target." So a $3 trillion market cap is over $900 per share. Joe here on X says if Tesla deploys 2 million robotaxis, its PE is 25. Next year, Tesla will have 8 million cars out on the road, nearly all robotaxi ready, and will be able to produce 3 million more per year. Tesla stock could go up 300% from here and still stay at a 25 PE at full utilization of the current fleet. And none of this takes into account Optimus humanoid robots. Once Optimus is fully ready, the latest being 2027, every 6 million Optimus generate as much as 2 million robotaxis per year. The demand for Optimus will be north of 6 billion, the equivalent of 2 billion robotaxis. That means that if the stock goes up by 100,000% from here, it would still be at a PE of 25. This post has 158,000 views on X. Kathy Wood says, "Isn't it sad, if not damning, that institutional shareholders rely on proxy firms to tell them how they should vote? Index funds do no fundamental research, yet dominate institutional voting. Index-based investing is a form of socialism. Our investment system is broken." This is in regards to the shareholder meeting November 6th and the compensation package vote for Elon. This post on X has 7.7 million views. Victor Derngoff who is among the top 3% of stock pros covered by TipRanks, is going all in on Tesla, backing his strong buy rating with aggressive price targets, a 12-month price target of $650 and an ambitious long-term target of $2,500 to $3,500 for the stock. The core of his upgrade for Tesla is driven by three major factors: Elon Musk's conviction, record EV deliveries, and the expected transformative growth in AI, FSD, and energy. Musk's commitment is a key pillar of the bullish thesis. The analyst points to the CEO's full engagement, citing both his potential compensation plan and a recent $1 billion worth of stock purchases on the open market. Beyond the CEO, Derngoff is encouraged by Tesla's operational performance. He specifically highlights the company's recent record Q3 deliveries and upcoming boost from the Model Y refresh. Given this momentum, Derngoff suggests that Tesla's Q3 revenues could have reached $29 billion, predicting that more significant gains are looming on the horizon. In Europe, 0.4 thousand Tesla sales were reported for the week of October 6th through the 12th. This is down 88% week over week. The quarter after 2 weeks is up 14.5% quarter after quarter and down 22% year over year, with year-to-date sales that are negative 20.1% year over year. Heisenberg on X says Tesla earnings in a couple days, implies a 8% up or down move or so. Polymarket showing high odds of an earnings beat, not necessarily about guidance or what the stock will do, but just if they beat Q3 earnings or not. Is binary. I'll take the yes on this. Mike Investing says Tesla is set up to begin a historical squeeze to $500 plus within the next couple of weeks, tightly wedged within a bull flag right above the 21 EMA. The upcoming move can be explosive. Levels this low on Tesla will never be seen again shortly. $600 plus incoming soon, which very well could be. Now let's talk about this whole AWS situation. Snapchat was dead, Roblox won't load, Canva's crying, even Alexa's pretending she didn't hear you. It's not you, it's AWS, the invisible backbone of half the web, choking in its own cables. Amazon Web Services says its core US East servers are seeing increased error rates. In other words, the world's most critical data center just tripped over itself. The outage hit around midnight Pacific. By sunrise in London, social feeds were ghost towns and cloud dashboards were screaming. Here's the ugly truth. The modern internet is a monopoly board. AWS owns Boardwalk and Park Place, and when it goes down, everyone's homeless. Expect Ripple chaos. Stalled shopping carts, glitched banking, smart homes reverting to dumb bricks. Businesses bleeding millions by the hour. If this lasts, markets will twitch and regulators will start asking the D word: decentralization. For now, the cloud's on fire. The question isn't if it's fixed, but who still trusts the sky after this. That is what Sky News said about this outage, which really affected just everything today, it seemed like, especially markets, okay? Robinhood, Public, Webull, none of them were responding correctly. And the odds are good that even by the time this video is published at 4 p.m., all of the errors are not fixed. They're still not all fixed. It's like a ghetto 2021 disable the buy button all over again, okay? Because people just cannot go out and buy like normal, like they were going to. So yes, some areas, some stocks are doing well, others are not. Today is really a day in which you don't want to pay too much attention. Today really just doesn't matter because of how widespread the outages were. You can't really take this market too serious today. No matter what your favorite stock did, no matter what happened, the fact of the matter is, there is a large chunk of investors that were unable to buy or sell today. Okay? Kind of like 2021 and the whole GameStop situation. This is what it reminds me of. Like, the moves today, they're almost not real. Okay? Good or bad, whether you like that or not. Now, Donald Trump says today we're way ahead of China in AI. Trump says we'll be catching China on building ships. Trump says we're way ahead of China militarily. Trump says he hasn't told Israel to go back in, says Hamas will be eradicated if they have to be, and Trump on China says, assume we will talk about Taiwan at the meeting. And Donald Trump says today that China may pay a 155% tariff if no deal is reached by November 1st. NASA's Duffy says we are in a race against China, so we need the best companies to operate at a speed that gets us to the moon first. Trump says, I think we'll end up with a strong trade deal with China after South Korea. And Trump on China says, I expect to work out a fair deal with Xi. That's the Chinese president. And Trump on China trade says, we'll see what we can do. Trump says that China has been respectful of us. Trump and Australian Prime Minister sign a critical minerals agreement. And Trump says we are working with other countries on rare earths. Johnson says he will bring the House back to session if Senate passes a bill to pay furloughed workers. Russia's Lavrov and U.S. Senator Rubio hold a phone call. The talks are described as constructive, focusing on implementing understandings reached during the Trump-Putin discussion. White House economic advisor Kevin Hassett says the government shutdown could end this week and expects a moderate Democrats to support a short-term deal following weekend protests. Iran's supreme leader says America is the true embodiment of terrorism. Hassett on the U.S. economy says right now the numbers are great. Hassett expects the Besant meetings on China will clear up misunderstanding. Hassett says if the government shutdown doesn't end, the White House will have to look at stronger measures. Goldman Sachs sees a 0.3% September CPI rise. Goldman expects both headline and core CPI to rise 0.3% month over month in September, keeping core inflation at 3.1% year over year. They say cooling car prices, lower airfares, and easing labor and housing pressures could offset tariff-driven gains in categories like communications and furnishings. Core inflation is seen ending 2025 at 3.1%. We will be getting the CPI report on Friday. Citigroup says AI is not in a bubble yet. Citi says AI stocks remain expensive, but not in bubble territory. Its valuation models show only a few red flags, mainly in U.S. asset-heavy names and international adopters. The bank recommends staying invested, but taking profits in overheated areas, favoring AI at a reasonable price strategies. Citi also stressed the asset-light versus asset-heavy distinction as the sector broadens. Strong earnings and rising capex keep the AI outlook solid for now. And Goldman Sachs has said that the market shows some bubble-like signs, but remains driven by strong fundamentals. Here on the day today, the CNN Fear and Greed Index still remains deep in fear territory, coming in at 31 today, following Friday's close, where this was actually an extreme fear, is just showing you like, hey, the markets look okay on the surface, but under the surface, there's been a lot of pain and carnage. If you truly adopt the mindset of buying when people are fearful, right now presents an opportunity to be a buyer. Market momentum is neutral, stock price strength is neutral, stock price breadth, extreme fear. Put in call options, fear. Market volatility is neutral, safe haven demand in extreme fear. Junk bond demand in extreme fear as well. The latest AI investor sentiment survey shadows similar numbers. Bullish investors at 33.7%, neutral investors at 20.3%, and bearish investors at 46.1%. People are bearish. Okay, the percent of stocks trading above their 50-day moving average rebounded a little bit from the lows we had on Friday at 42.1%, currently at 46.2%, but still, that's like 54% of stocks that are and have been in an active downtrend. Like, this market internally is not nearly as strong as you'd think if you looked at the headline S&P that is pretty close to all-time highs. But again, I think you just need to look at today as one of those days that really just doesn't matter. Because of the AWS situation, a lot of people were just not able to participate today. A lot of brokerages just failed people because of AWS. And again, it's one of those, like, if you had any day to just not wake up and not look at your portfolio, just live your day like normal, today would have been those days, because there is zero implication from the move today in markets because of so many people being shut out of their brokerages. I have a brokerage right now that I literally have not been able to get into today. Over $100,000 in that portfolio. I couldn't buy or sell if I wanted to. And I wanted to do some buying. And I was unable to. I imagine that's probably happening for a lot of people today. Let me know your thoughts on all of this down below in the comment section. Ladies and gentlemen, have a great rest of your day. And I will see you in the next one.